Welcome back to Cryptolytics, giving a fresh take on crypto analytics. And this is your crypto recap, where I cover some of the things going on in the crypto space. Okay, so looks like the market is taking a breather, or it's dumping. Depends on how you want to look at it. But as I mentioned in my last video, I said that the market was looking pretty exhausted, pretty tired, and we got confirmation on that on this doji candle here on the weekly. So the weekly actually wasn't able to close above the previous high, right? So this is the previous high here. We actually never were able to get a close above it. And then we created what's called a doji candle, or an indecision candle, on Bitcoin on the weekly chart. So this is pretty important. And the other thing that we hit as well, and I was going to cover this in the last video, but I guess I just forgot, but you know, these things happen. I wanted to point out the Pi cycle top moving average. So the Pi cycle top moving average, and by default I usually have these hidden, but this is where in 2019, so that's in the previous cycle, we hit before we retraced, and that was pre-halving as well. It was sitting at around 70k when it was first touched, and we didn't quite cross it or close properly above it the first time sort of we got to it. But then within that week, we sort of went a little bit above it, then we were maybe rejected, so on and so forth. And then now, as you can quite clearly see, we're at 62,000. So, I mean, it's not huge. It's not crazy. I mean, all the altcoins are looking pretty average at the moment, but I did say that, you know, leading to the halving, there's a high probability that we'll get some sort of pullback into the halving, because that's kind of how price has gone every time since. And if you remember the last like 3 or 4 videos, essentially I've kind of been saying the same thing over and over again. And I don't know, I don't think it's probably very popular. I think most people like to hear bullish only things about Bitcoin, is that we'll probably get some sort of pullback to maybe back to the top of the SMA VWAP bands, like we did not the previous cycle, but the one before it. So right now, the level for the middle band is about 56k, and the top is about 59. So in the cycle prior, so not the previous cycle, but the one before that, so we'll just say 17 bull market, if you will, we actually went to, in 2016, we went to the bottom of the bands before we came back up. Now that would also correspond with a mean reversion as well. So as in a mean reversion to the bull market support band, which we've done many times before, right? And the bull market support band is just 2 20-week moving averages. One is simple and one is exponential. So, I mean, I could just say they're 20 EMA band, but either way, they're both very relevant levels. So, I mean, if we get a mean reversion all the way down there, then that's 46. And as I said in the last video, I'm not so sure that we'll get back down there, but you know, these are levels that we should probably consider. Now, I figured that I should probably do this video because, you know, I'm traveling at the moment, but I figure, you know, I probably should do something, because I don't want to just be silent when the market's dumping, essentially. But yeah, these are sort of some key things that I've sort of been alluding to in all my prior videos for my Bitcoin analysis. So this is kind of why I just wanted to bring this stuff back up. Now, I did open a short on Bitcoin up here. And I'll show you a why in a minute, or what I use for that. That's just a short-term play, and you know, I'm happy to like cut that. And yeah, I don't have full conviction in like a really deep retrace, but just in case, I'm nowhere near hedged. You know, this is a tiny short compared to how much spot, you know, I've got. And yeah, my portfolio has taken a massive hit. There's no doubt about it, but it is what it is. You know, this is what we get. We haven't even got really that sort of 20% pullback in a while. You know, the last time we got one was actually at the start of the year. I guess you could say this was the sort of 20% pullback. Well, now we're kind of hitting that now, right? So this to me is, you know, these are like sort of buying opportunities, though this is technically catching a knife. So if you do buy here, then, you know, price might keep going lower. But from what I'm seeing, you know, I think there's still enough justification to be sort of laddering some orders down if you're wanting to buy things at cheaper prices. Altcoins are at a massive discount right now, essentially. But anyway, that's just sort of what I wanted to bring attention to, is this moving average. And then we'll have a look here. And this is the moving average for the Pi cycle top. And you can see right here, we came to it, and the SMA VWAP bands, which we actually crossed above. So that's why I was alluding to prior cycle to this one. But, you know, we couldn't close above the moving average there. We were rejected from it, and then we came down. But you know, whether we do this or we just do what we did in the prior cycle, that who knows, right? You know, this is just a fractal, so there's no guarantee that it will just copy what it did in prior cycles. You know, it's its own cycle. It's going to do its own thing. And also, as I mentioned as well in prior videos, is that it took us like a month to break out of the all-time high, you know, the last cycle. So, you know, that took us about a month. How long has it been since we touched that all-time high? So that was the all-time high there. We'll say this candle. It's only been 2 weeks, 2.5 weeks. So that means we've got another 2 weeks. We could potentially come down a little more, and then we could try, because it can take a few attempts to break out from all-time highs, because people often will put their sell orders there. It's like, it's a massive psychological level, right? As I mentioned as well, is I'm looking for that 4, right, with the Elliott wave. And I've had this on my chart now for months. So, you know, I didn't just like sort of do this now, but I've been looking for that 4, which is a sort of pullback, right? So we've had, in terms of Elliott waves, we've had the first, the second's the pullback, and then the third wave up, and then we're getting the 4 for the final move to the upside. So this is looking like our 4, and the 4 typically is a larger pullback than, so like these Elliott wave pullbacks tend to be larger than these small moves, these interim moves in between each major move to the upside. So if we have a look at the measurement here, we got almost like 30% roughly on that one. So, you know, that we could still certainly come down a little more, and that's healthy, because if we do come down here, then it extends out the period of time that the market will last. So, I mean, that's not a bad thing. I've got here this Fibonacci line here. That is a 50% retrace, which currently is sitting at 57K. So this to me is a pretty big level, because we've got this now meeting the mid band of the top of the SMMAV wet bands. That's sort of 2 levels there where we could sort of bounce to. It wasn't a huge prior level. We did skirt around that level and create an order block here. That was the first peak of the 2021 bull market. So you could call that a order block level as well. But for the most part, at least in terms of the recency bias categorized indications, we have just a couple of things here which indicate we could come down that little bit more. That's my target for closing my short. I'm happy to cut that if it sort of just goes back up. But these are great buying opportunities as far as I'm concerned. So if you missed out on Bitcoin, you know, before this, then, you know, this is where you can sort of start to buy, not just Bitcoin though, like, let's be honest, alts, because alts are going to come down a lot, because if Bitcoin's going to do this, then altcoins are going to take an even bigger hit. So that's the other thing as well. And this one might happen over the next 2 weeks, where we come back down to this kind of level. Alternatively, we come down even further to, you know, your 50K level. Honestly, I mean, by that time, the 20-week moving average band will have come up, and you see there's another line in here. That's the other line for the pi cycle top indicator as well. There's the other moving average. So when these two cross, that's when you get your top. So this will flatten out the moving average more, which is good. So that's what I mean by we will get an extended sort of period of time on the cycle, because the longer these two moving averages take to cross, more likely the longer the bull market will last. So instead of our compressed cycle, like what I was saying before, if we do get a breather, then we might end up getting the full length cycle. So we might come to the end of the year next year instead. So these are our opportunities to load up on more alts for the most part. I mean, you can buy more Bitcoin if you want, but that's completely up to you. That depends on how much capital you have and what your targets are overall. But anyway, I just thought I would quickly address that, and that's the Bitcoin chart for the most part. As for my entry on the short, I remember I told you in the last video, the video prior, and I think maybe even one before that, I've been banging on the table about this, is that this line here is a very important level to hold, and then if we lose it, then it's a new resistance. So that's exactly what's happened, and we were stuck between a rock and a hard place for a short period of time there, where we basically bounced off the 21 smooth moving average on the 12-hour, and we bounced off it, came back to revisit this. We've lost the 21 smooth moving average, which was where we could have potentially held and ping-ponged around in, and then we've come back to try and get back above it, and then we were very aggressively rejected. So this is our sort of higher time frame trend line that we lost. First time, we retested it there. So these two lines, very simple trend lines, but these two were very important to try and reclaim. But this was our break of trend line, retest, and then down. And this was our break of moving average, retest, and then down. So that's why we're getting aggressive move to the downside, unfortunately. As I mentioned in the last video as well, is that the stochastic heat map was super overheated. So that's why I was saying like we need a break, because this is extremely overbought. And we can get overbought for long periods of time in a bull market, there's no doubt about it. But this is just extreme levels of overbought. So we just kind of need things to reset a bit. We need our momentum oscillators to reset. We need a number of things to reset and cool off a bit before we can continue up. I think we need to get to at least like we might get to like a green and blue phase on the stochastic heat map before we are able to build enough sort of momentum to start to break those levels again. Maybe at least just a yellow, as in, because that's how this stochastic heat map works. It's like the cooler it is, the cooler the colors get. The hotter it is, the hotter the colors get. So at least just with regards to the stochastic heat map, you know, we're getting that sort of cool off phase. And we're about to do a crossover. Last time we got a crossover was here. So see this big candle here? That's when we got a crossover. And what do I mean by that? There's moving averages inside of the stochastic heat map, right? And when you get the white line, which is the fast moving average, cross over the slow moving average, which is the yellow line, that's when we kind of confirm that we are in a corrective period. And it's not just another sort of scammy, you know, like what we got a couple of weeks ago, where just we got those Darth Maul candles that were just wicking people out and trying to force close positions, be it with stop loss hunts or a liquidation hunt. Nevertheless, we're about to get that crossover, which is our confirmation that this is a proper retracement. Now, again, that's not a bad thing. We kind of need it. I'm feeling it too. Don't worry, I'm feeling a little bit of it. That not fear, I guess, but you know, that like that sort of look, you know, my portfolio made a new sort of all-time high. You know, I reached this crazy new level that I've never seen in my portfolio before. Like, you know, in terms of a number, you know, if you've got this number targets and stuff like that, and it's lost that number now, and I'm like, oh well. But it's not the end, right? It's definitely not the end. This is not the end of the cycle. It's not the end of the bull market. You know, it's just one of these things where these sort of corrections are sort of needed to rebuild the energy to take on those higher levels with less resistance. I feel like the lowest we could come to without breaking structure is like 53k. Not so sure we'd get there, but anyway, that's the sort of lowest, because if we get down below here, then that's technically a break of structure. Now, we did kind of get a little bit of a break of structure in the last correction here. That sort of broke this structure here, but it didn't break the overall structure, and we didn't get any closes below the bull market support band like we did over here. In terms of structure only, this was almost a break of structure here back in June last year. So this kind of looked like a break of structure, but if anything, it was just a range. And it almost looked like a break of structure here in Jan at the start of the year, but we still had this structure, so this was fine. So this is our kind of next structure to hold, and as long as we stay above 50k, I think we're okay. And the bear market would be confirmed, I would say, at 48k, and I'm just not seeing that happen just yet. But anyway, just figured I would mention it nevertheless. And as I said in the last video, is that this V-shaped recovery being completely engulfed was like not the most bullish of price action. Well, I mean, yeah, I mean 10% to the downside kind of is proof of that. So yeah, and we're getting blue again on the stochastic heat map on the 1 hour. So we haven't seen these cooler colors on the stochastic heat map for a very long time. I mean, have a look, that was green only, right? When was the last time we had blue on the stochastic heat map on the 1 hour? Okay, Wolf Beb, that's not that long ago, I guess, but you know, last time we got a deep proper retracement where we went from red, like that was pretty hot. That was pretty hot. And that was around 46k. So we got kind of hot there, and then that's when we cooled down. So that was like 42,000, and that was at the start of the year, right? That was at the start of the year. So we really haven't seen any blue since the start of the year. So we're finally getting some of that now. Look, it's getting like darker as well, right? You're just looking at stochastic heat map alone. So for me, if I see blue on the stochastic heat map on the 1 hour in a bull market, I buy. That's just a simple fact. I just buy. You know what we did last time over here, as I said in Jan, I was pretty aggressively buying around here because I was like, we're in a bull market and we're seeing dark blue. Like, this is insane. If you want to know what this is, I've mentioned it in prior videos, but it's SHM, the stochastic heat map. If you're curious, I kind of like how it looks, to be honest. Like it looks visually appealing to me, but that's essentially all it is. But we're getting a open interest sort of flush. We're getting some of the leverage flush from the system. Still pretty high, actually. We're still about as or higher actually than we were at this Darth Maul area. So there's still plenty of sort of liquidity in the perpetuals space, if you will. But nevertheless, you know, I mean, we're seeing some blue now, so here's some decent buying. If I see some dark blue, I'm going to be very aggressively buying when I get a chance to look at my computer. So that's Bitcoin for now. One thing worth noting is that there's potential that the Japanese economy might end up putting money into Bitcoin. Now, when that happens, who knows? But this is some speculation that's being thrown around at the moment because they need to do some things to really shore up their economy because they're in a little bit of trouble at the moment. So, and they have, I guess they have been probably since the Asian financial crisis in 1997. They never quite recovered from that because they used to be a powerhouse in the 90s and in the 80s as well, and to a point where they were almost overshadowing the US, and the US actually felt threatened by Japan's economy and their success. So that goes to show, you know, how huge they were. Essentially, you know, you had the bad guys, you know, in American films around then were like, you know, Japanese, or you had like the bosses, the mean Japanese boss that was firing the protagonist from their job. That sort of stuff, that's kind of what Hollywood does. But nevertheless, they were just a really powerful economy, and they never really recovered properly. They did to a degree, but they're looking to do things, and they want to put pension funds. Some of the pension funds are looking to inject money into Bitcoin to shore up and bolster the sort of portfolios of people who are retired. So, and they have a massive retirement population, right? So Japan's got a hugely aging population. So looking after that population, you know, through good investing is kind of important. So there you go. Like if Japan starts to put money into Bitcoin, at least for the pension funds, well, I mean, that could be a massive injection of liquidity into the system. So that would be good for us when that happens. Who knows? So I did post this a few days ago, and this was before we even got a major pullback or anything like that, right? So it was still like pretty high when I posted this, but the signs were all there, right? The signs were all there, and I said, yep, there's a strong support at 57K. And this is before we got anywhere near 61,000. So the signs were there, but I basically plotted all this stuff out and put it on my X. So, you know, this is the way I see it. Like, whatever happens, if we move from here, that we buy, or we can buy BTC at a discount, it's a win-win. So that was the cycle chart that I posted there. But as I said, that's a very strong level for a number of reasons. Also, yeah, the 0.786 fib from prior cycles. That's another reason why that 57K is a very, very strong level. Okay, so let's get into some key levels for a few other coins and tokens at the moment. So looking at this is a 4-hour for Solana. Now, this is just a bot that I've got on here, so that's why it looks like this, but I've still got some pretty key moving averages on here that we can look at for some potential buy levels for Solana, for example. If you're interested in buying Solana, if you maybe missed out on buying Solana and you wanted to buy more of it, then our daily moving average for Solana are sitting at around 157 for the 21. I mean, that would be a pretty nice place to scoop up some more Solana if you sort of missed out before, because I mean, we got to 210 almost on Sol. Now, I did post on Solana, I did post on my X that I sold some Jito Sol at the equivalent of about 204. So right here, I sold about 9, just under 9, I think it was, Sol equivalent, or maybe it was about 10 Sol equivalent, just around that mark. Not too much, because I've still got a lot, but I just wanted to play with the DCA function. So because of all of the other things that I saw with regards to the crypto market, and I saw that maybe we'd be getting a pretty decent pullback at some point, I decided to sell a chunk of my Jito Sol and then turn on the DCA. So every 12 hours, it'll buy back for the next 10 days, twice a day. So it's at around the candle close, the next candle open on the 12-hour. That was my level, and I think I've got it marked out on the actual chart. Here it is. This is actually a support right now. Where we are right now is a support level. I did say also that my first sort of buy zone for Solana was about 174, but adding to my position here. So this is my leverage position on Solana. Very, very small position again compared to what I hold in spot. Don't plan on selling yet, but right now we're at sort of that key sort of zone, support zone. So anyway, that was where I took the profit on the Jito Sol, and also where I took some of this leverage position off the table as well, because this was a major horizontal support and resistance. And if we go back here, we can see there was a peak here and a peak here. So it made sense for us to come back to that level and potentially reject from it. So it just kind of, there's some logic there and definitely some reasoning as to why this could happen. Also, just the rest of the market corrected at the same time, right? So there's nothing unique to Sol in this case. But nevertheless, you know, we came down and we're right now at that support. So do we just hold the support, and does the market sort of fake everyone out? Because I think everyone now thinks, oh, the market's going lower. You know, that's it, doom or gloom. Well, potentially we are going lower for sure, but maybe it's a sort of a trick, and maybe we just go up from here. Who knows, right? We don't know what the market has in store for us. But nevertheless, if I probably will cut this position and change to short if we accept below here. So this line here is my average true range line to work with. And if this is crossed here, then I'll probably end up flipping to short and then start adding to position if we get that sort of bounce. Because I feel like at some point we'll get a bounce, because nothing goes down a straight line, right? So we'll probably get a bounce at some point. I'm not sure where from, but a bounce back up to sort of try and test some of these higher levels again. And then if we fail and just come back down and create a lower high, then that's probably where I will add to that position, so I can just average into something, because sometimes it can just go straight down. Like, who knows why? I don't know why it would happen. Could be due to Jerome Powell or something like that, because that's coming up. So nevertheless, it's one of those things where I like to at least start positions and then add to them as things move away from me. And then as soon as they're invalidated, then I flip the positions as well. But yes, anyway, so the other thing we can see on the Solana chart is we can see we've got this trend line here. So there's a trend line here that's very old and it's very well established. So it comes to, we'll just hide the indicators for a second so you can see. It was established back in October as a trend line here, and then we deviated away from it, and then we sort of reverted back to it, came back below it, retested it as a resistance, and there was resistance here. It reclaimed it, held it, and then as support, and then failed to go back down. And look at this huge wick here. That's a very aggressive support wick there, right? But also a wick to the upside. But then we, essentially, as soon as we reclaimed it, we came right back above it. So what if we sort of come back to your sort of 190 level or something like that as a bounce potentially, and came back down to that line? That would take us to about 150, and the moving average is about 158. So, you know, maybe the 50 comes up, right? And by the time it comes back, it'll be at around 150. So 150 seems like it probably would be a psychologically strong level as well, because 150 just seems like a nice round number. So, I mean, for me, I've got DCA turned on for that Jitto Sol, but I do have some fresh capital that I wish to deploy that, I think these are my sort of key levels that I really want to aggressively buy more Solana. So this is your opportunity, essentially. And the reason why I say that, I still feel like the upside targets for Solana for this cycle are pretty good and quite high, right? So, I mean, I did say in my last video and prior videos as well that my upside target for Solana as a sandbagged realistic target would be about 350 per sol, right? But I think that there are some things that could happen that could take it up even higher, right? And this sounds like a bit moon boyish, but you know, there's projections that the crypto market this cycle could go to 7 trillion. Now, there was, in the prior cycle, we were talking about maybe hitting 10 trillion. And, you know, we only topped out at like, 2 point something. I think it was, hang on, let me have a look. So the total crypto market cap, which we haven't got an all-time high yet for, the total crypto market cap top was about 3.02 trillion roughly. And we came into that sort of level here anyway. But, some people were talking about maybe this cycle will get to 10 trillion, but that's pretty extreme. But with all this fresh new capital, there's a good chance that we could get to 7 trillion. That's quite high though, admittedly. It's about 164% up from where we are now, which is a lot. I have to admit that is a lot. But there are some estimates from some very knowledgeable people who have been around for a very long time who are saying that we could very well hit 7 trillion this cycle. And if we do, which, that's not too crazy, because if you think about, the prior cycle top, that was 280% difference, right? So diminishing returns factored in, that's not too crazy, right? That's not too crazy to assume that we could, especially with, potential ETFs, which, I think in the short term might get rejected, but all that sort of stuff, we definitely could very well get that sort of big inflow into crypto that could take us up there. So what does this have anything to do with Sol? Well, in my post, which maybe you read it already while I was waffling on, but if the dominance hits 6%, which Solana dominance has been doing very well lately, it hit an all-time high before, the market decided it was not ready to sort of take out any more of those numbers. But Solana dominance almost hit 4%, while it was about 3.7%, about 3.7%. So the dominance has grown on Solana by almost 600%, or well over 600%. From the lows, it's even higher, but I just came from here, which seems to be like a fair value sort of low, if you will. But that would only be an additional like 70% up, So as long as it keeps market share and maintains kind of this sort of this level of dominance, then I mean that's not too crazy. So 7%, right? Or 6%, right? So if we get to 6% dominance by the peak of the bull market, which, you know, when bullishness is back and the mania and all that sort of stuff is back, because I think all the meme coins and stuff will be taking a breather now, especially with all the SLERF stuff, which I will get into. That's the main thing I'm going to cover today after I cover price action, is the SLERF Saga. The price could potentially get to $1,200. And that sounds very moon boyish, very, very moon boyish. But given what I've just, you know, all my reasoning just now, I mean, doesn't sound too crazy, right? Imagine $1,200 Sol. That would just be insane. So anyway, that's why I'm not selling my Sol spot and why I'm just playing with a DCA with a small amount of my spot holdings. And the rest is just like kind of leverage trading really for the most part. And I use Drift, so what I'm actually collateralizing is my Solana to trade other assets. So I'm actually using that to trade other assets. Very low leverage, 3x. So, you know, it's not too degen at all. Like when I look at a lot of my leverage positions on Drift, there's no liquidation. So that might put some things into perspective for you. Like, it's very, very non-degen, right? Because I don't want to waste my Sol on any potentially bad trades that I take. But anyway, it'd be pretty crazy. And so yeah, anyway, that's the reason why I'm not selling my spot and why I think there's a lot more upside potential for us. And yeah, I just think that we need to come down a little bit, take a bit of a breather, you know, reset, as I said, reset some of the momentum oscillators and stuff. We're still in a bullish trend according to the trend meter. Again, this is a trend meter down the bottom that uses the combination of the 200 period moving average and the TK cross in the Ichimoku cloud. So when it's above the 200 period moving average and the TK cross is in a bullish structure, then that's when this turns, well, because this is a blue and red candle structure, that's why it's blue down the bottom, but there'd be green on green and red. But anyway, it's still in a bullish trend at the moment, and it has been, well, it got a bit of a fake out here, but it has been since October last year essentially. So anyway, I think that's probably it for Sol, at least for now. This chart looks a bit messy when you zoom it out, but you know, when you look like this, it doesn't look so bad. Anyway, so I'm thinking maybe we might get a little bounce here at some point, because a lot of shorts will be opening up here as well, not just on Sol, but across the board. Late shorts will be getting in, so you know, we might get a sort of a move up to sort of play with those a little bit as the market starts to get more bearish. But anyway, wanted to cover Ethereum next. Now, I am in a short on Ethereum again. It is what it is. I just sort of follow my strategies. I just don't follow them when I see these big, massive candles like this. So I kind of ignored this personally for my ETH trade, and I held it because it was open since all the way down here. So when I saw this big, massive candle to the downside, I just assumed that was probably like a fake out. Probably, yeah, I was definitely sweating a bit, but as soon as I saw this big candle here, I moved my stop loss to this wick here. And then as soon as it just went kind of back up, then I've started to sort of consider that maybe we might be getting to the end of this trend. And anyway, we surely enough did. So Ethereum hit a top of about 4,100, which is pretty impressive indeed. And then unfortunately we lost the trend here, but in a more gentle and believable way, right? Because this is not a proper break of trend. We don't have enough closes. Like if you look on the daily there, that's just like a wick, right? So that doesn't mean anything. Whereas we're getting some daily closes below here, which to me, that's confirmation that we are in a bearish trend. So I opened my short, not here. I actually opened it up around here, and I did post on my X as well where that's at. But anyway, it's just, you know, this is just, I like to do these little sort of short-term trades while I wait because I've got all these spot bags just like waiting and just kind of doing nothing. A lot of them are, you know, I'm using staking and I've got them in money markets, so they're earning yield and stuff like that. But for the most part, this is sort of me just keeping myself entertained, I suppose, as well as the DeFi and airdrop farming that I do. But anyway, so we've created a new trend line here. So we did bounce at that first sort of Fibonacci level. There was one here. I've just gotten rid of it because it's kind of done now. And we had this horizontal support and resistance that so we fell through now, and that's now a resistance as well. So you saw we acted as support here, bounced up, and now we've lost it. And then we actually also lost the first fib as well. And then we came back up to retest it, and then sort of we failed there, and then we've lost that now too. So now we're coming into the 50% retracement point, right? So this is, if you're wanting to buy spot for Ethereum, this is a pretty good level, if I'm honest. And yes, we could come down further, but this is still a pretty good level. It's about 31, 34. And I mean, that's $1,000 from the all-time high, which is about 30%. So that's a pretty big move so far on Ethereum. And could we come down further? Absolutely, it's possible. 50% level is pretty significant though, to be honest. So again, like if everyone is starting to look quite bearish, then maybe this is where we turn around. But I don't think everyone's quite bearish enough yet. You know, if you want to talk about counter trading sentiment, we're not quite bearish yet. There's probably a lot of people out there who are freaked out by this, and that's fair enough. So that's probably why the fear and greed will have come down a bit. Actually, it's 83 right now. Wow. Okay, fair enough. Well, it's come down a fair bit. I think we'll probably get down below 80 within the next day or so. So the next quarter sort of bargain buy zone for Ethereum would be the 618. Now that would be a very significant Fibonacci retracement, which is about 2,900. I also feel like the $3,000 level would probably be a psychological level that will probably hold. And there's also an order block here as well. So we probably get some sort of bounce here as well, potentially. But yeah, this is our trend line. You know, I feel like once we break this, that's when I think we're probably off to the races again. We'd have to break it and hold above it for maybe a day. And then that's when I think things will probably start running back up. But for now, we've definitely created a bearish trend on Ethereum in the short term. So anyway, let's wait for this trend line to break. And then that's when we know we're back on for Ethereum. But these are some great places to buy. I mean, I'm sure when you were seeing Ethereum at $4,000, you're like, I wanted to buy more Ethereum. Well, now's your chance, right? Now's your chance to buy. Because as I said in previous videos, is that we're in a bull market, dips are for buying. This is not just any dip, this is a proper correction. So this is where like the best buying opportunities are. Now, another chart I wanted to quickly cover was Injective. Now, Injective, I have been very, very bullish on this, and I didn't actually get into this properly until this structure here. So, I mean, I did buy initially down here, but I had such a small amount, it was insignificant compared to what I probably should have bought. But anyway, I didn't realize how good the chain was until I actually started using it, and I realized it's actually a really good chain, and it has a really cool DeFi ecosystem building out. And so that's when I became more bullish on it, because I could actually see how good it was. We're actually right back into this sideways structure. So we're just going sideways, skirting around, like ping-ponging between the top and the bottom of this band here. And we've also got a trend line here, which we've come back to retest. Now, I've got a pretty significant buy level at 30, and there's a good chance that if the rest of the market's coming down, then yes, well, Injective will probably come down too. But again, if this is our sort of place to bounce, then, you know, Injective is saying we might be ready for a bounce here too. So we might sort of have some sort of light reprieve before maybe coming down a little further. I'm not really sure, but I've got a very, very significant buy here. And again, like I just always feel like I'm underwater on this, considering how bullish I am, or underweight, I should say, not underwater, but very underweight on my Injective. So yeah, we're just still in this. And so basically what this was, if you just think about it, is it was just a deviation. So I figured maybe it was a breakout up of the bull flag, right? So I thought it was a bull flag break to the upside, which would be sort of target would be like 60, 70 or something like that. But no, we're still stuck in this range for now, unfortunately for Injective. Great buying opportunities. We're in the median line of this range here anyway, so we're in the middle, back to the mid band. So anyway, I'm seeing these as some great buying opportunities because I've got a bunch of fresh capital. I did de-risk on some of my meme coins, and that gave me extra capital to play with, essentially. And so yeah, this is where I want to deploy it into some of these high conviction plays, like these L1s and stuff, things that I really have a lot of sort of long-term conviction in. So yeah, let's see how it goes. But at the moment, we're at the trend line support, and we're at the median line on the sort of range here. And if we get maybe we get a deviation to the downside, and then we scoop back up, and that's when we can sort of take our next move to the upside, right? Maybe that's where we take our next move to the upside. So anyway, that's Injective. Wanted to cover Chainlink. I did mention this on X. I said that this is my major buying level. So Chainlink, for me, I've been in this one since about $7. So well and truly more than a 2x. But anyway, I didn't take any profit on this, but I actually want to add to this position. Again, this is a leverage position, so I'd be happy to cut this as well. I do have some spot that I bought back in 2018. So anyway, but for the most part, if I see acceptance below this level, I've got buys here, but if I see acceptance below this level, I'll probably flip to short for the short term, because we can do some pretty aggressive stuff. I mean, this was the last bull market, admittedly, so I don't know if it's a fair comparison, but you know, we did get sort of some pretty aggressive move here, and then we sort of went down further. So let's have a look here. We did get some aggressive move here. Doesn't look like that now, right, to be honest. But anyway, I'll just reopen my position wherever I can, I suppose, for Chainlink. And yeah, anyway, I just like to follow this sort of strategy stuff, it's barely done anything compared to like, look at this. This is monstrous. But now with Chainlink, we've got Pyth and stuff like that. So Chainlink is great for like weather data and I guess other stuff. But you want a price oracle, I think Pyth is probably significantly better. But that's just my opinion. I mean, that's also the shiny new toy, whereas Chainlink has sort of been around for a long time. A lot of underwater positions would be here. Look at all this. This block here, there would be a lot of people who bought around here who probably would want to cut it around $30. So that's the other thing as well. We're nowhere near that right now. So I think there's still a decent amount of upside for Chainlink still. And I really do think that, you know, whether it gets to all-time highs again, I'm not really sure, but hey, there's a really good chance. If we do get to that 7 trillion market cap, like I was saying before, then there's a good chance that we will sort of pump up at least to the all-time high from prior or even beyond. But anyway, as I said, I am adding to my position here and we didn't quite get there. But again, if we close and accept below, and when I say accept, it means like multiple days, it'd be like probably a day or two closed below here, then I'm changing my tune and I will get back in. I don't know if I'll short per se. I think we'll probably just close my long and then reopen a long when I get a signal, I guess. So anyway, that's Chainlink. I did mention it on my X, so I just figured I'd cover that. Now, the other thing I mentioned in prior videos was XRP. Now, XRP is starting to accept below this trend line again, which is not ideal. Now, if you're in a position on XRP, like probably hold it if you really want to, as long as it's a spot position. But, you know, it's one of these things where if you're in a leverage position on XRP, well, I don't know, it might not be looking the best right now, but we are just still in a range anyway. So, I mean, look at this. It's just like, this is your low here. This is your high here. We're just kind of stuck in the range, slight deviation. So, I mean, it's probably still okay, but that epic 7-year-long downtrend, well, unfortunately, it's kind of closing back below it. So, anyway, it is what it is. But again, I think this thing still has some decent upside potential. I would probably buy or add to my position at around 0.53 or so. If we come down more in the market, that's kind of where I'll be adding to my position, which I already added to the last time we were around here. Oh, my entry is actually here. So that would be below my entry by a little bit. So it'd get me a little bit more XRP. But this is just a swing trade, essentially. And yeah, I am happy to hold this for the time being because I'm not underwater on it yet. And also, if I do get underwater on it, it's not that big a deal. But if we accept below here, then that's it. I'm probably going to cut that. So it'll be a small loss, but so be it if so. Anyway, that's it for charts. I think that's probably enough. So that's it for today's video. Hope you liked it. Hope you found it helpful. If you did, then please give the video a like, subscribe to the channel if you want more content like this, hit that bell notification if you want to be alerted when more videos come out from me. Go check me out on X because that's where you'll find all of this alpha before I even do any videos on it. And I will see you on the next one. This is Cryptolytics signing out. Have a good one.